Are you tired of entering late into the stock market when a new trend has emerged? This also happened to me, but don't worry, there is a solution. The solution is called thrust. Thrust is an excellent way to create additional buy signals. The beauty of thrust is that it tends to trigger buy signals very close to market bottoms. So in other words, when normal time indicators tend to be a little bit late, we get thrust anticipating the future buy signals that later will be triggered by our indicators. You know that most of the time we are trend followers. So trend follower means that by definition, we need a trend to derive a buy or a sell signal. So in other words, trend following does not trigger at the absolute bottom of a bear market. By definition, because we need the onset of a new trend. So by definition, trend following is always a little bit late. But there comes the beauty of thrust. Thrust can be calculated in several ways. One of the most typical ways to calculate the thrust is the so-called swike thrust, left image, which is based on the ratio of advancing versus declining issues. Another way of calculating thrust is also based on the advancing and declining issues, is the so-called dimmer thrust, the image on the right side. In both methods, when the number of advancing issues greatly exceeds the number of declining issues in a short limited period, then we have a so-called breadth thrust. So, in his book, he devotes chapter 10 with a telling title, Major Bull and Bear Markets, How to Spot Them Early. And this is the trick, how to spot them early. And he gives several measures of thrust with advancing, declining issues, their ratios. But the interesting thing is that this book was written in 1986. So now we have the benefit of almost 40 years of additional data, and it fully confirms the insights that Martin Zweig gave us 4 years ago. So what's a Zweig thrust? A Zweig thrust measures the number of advancing and declining issues, normally in the NYSE index, and takes their respective moving averages. When the breadth ratio falls below 0.40, and then the next 10 days it rises above 0.615, then we get a thrust signal. You may observe that we take a time window of 10 days, which ensures that we get our buy signals very near the absolute bottom of a bear market or a deep correction. Another thrust measure popularized by Walter Dimmer is the so-called breakaway momentum. Breakaway momentum is a surge in breadth where NYSE advances outpace declines, so it means also a very strange and very unusual explosion burst of momentum. Finally, I go back to his book, also included a measure of thrust based on the ratio of advancing volume and declining volume. I don't give the details here, it's quite simple. You buy his book, which I really recommend that you can read his book. Based on these popular thrust measures, I developed my own variations with several tweaks and furthermore suited to my trading time horizon. This toolbox of thrust indicators now is an integral part of my market timing strategy. So in other words, I have the Dow Theory for the 21st century, the Blay time indicator, the bull bear definition, capitulation. You already are acquainted with all these concepts, but I also have my thrust variations so that I can spot new trends very close to the bear market bottom or the correction low. So by using several alternative thrust measures, I ensure that most of the time I will get a thrust buy signal close to a bottom. It is not warranted, and this is the good thing of thrust.
I have run several studies measuring
that when you have, for instance, a Dow Theory for the 21st century or Blay time indicator buy signal, and a thrust has preceded or joined shortly afterwards, then normally these signals, while profitable, watch out, while profitable, they are not as profitable as signals that have been joined by a thrust. So thrust is really very important. I must say it's not the only way to derive signals, because many of you would be thinking, Okay, then let's do away with the Blay time indicator, with the Dow Theory for the 21st century, and just focus on thrust. No, because sometimes we have bull markets that have been born without a thrust. Statistically, they tend to be weaker bull markets, but we cannot discard them. A very good example has been the bull market that started at the market lows in October 2022. We didn't get a thrust, not by any of my personal measures, but nonetheless, first the Dow Theory for the 21st century, and next the Blay time indicator, they triggered by signals, and I honor these signals, and they were very profitable signals. But on average, statistically, when there is not a thrust, bull markets tend to be weaker. So we have to think about thrust not as the only way to derive by signals, but as a complement, as an alternative way to get by signals. The good thing is that when it triggers, it tends to trigger before the Dow Theory for the 21st century or the Blay timing indicator. So you will be asking yourself, okay, that's nice and dandy, but what's the improvement in performance when you add thrust to your time indicators? The answer is I get an additional 1% per annum increase in outperformance versus buy and hold when I integrate thrust into my arsenal of time indicators. And you may be thinking, well, for just 1% additional outperformance, is it worth to complicate your life and to include thrust? And I tell you, yes. Yes, because of two things. First one is because you really feel like kicking yourself when you get a late buy signal. When you see a new bull market and you see that the market starts going up, and your normal time indicators do not trigger a buy, you feel miserable when after several weeks, sometimes it's even weeks, then you get a belated buy signal. So psychologically, thrust is very important because it keeps you very close to the action. And secondly, don't underestimate 1% additional outperformance per year, because if you give it 20, 30 years, the difference in the final equity you will achieve is enormous. So yes, it really pays off. That said, thrust is not a tool to exit the market. So it's not a way to derive sell signals. There are no negative thrust. So you're going to say, because thrust now is really very negative, many issues are declining, this is a sell signal. No, it does not work this way. So to exit the markets, we still rely on the Dow Theory for the 21st century and the Blay time indicator. So thrust is only a way to anticipate a buy signal, but to get out of the market, we still need the Dow Theory for the 21st century and the Blay time indicator. And I can tell you, because everything has been tested and also traded in real life, it works seamlessly. It really works. So by now, you should be starting to see the big picture. We have the Dow Theory for the 21st century, trend following. We have the Blay time indicator, trend following. We have capitulation. Remember from a past episode that when the market has dropped too much and too fast, it is like a stretched rubber band, and it tends to snap back, and our capitulation is mean reversion, is mean reverting. So this is another tool in our arsenal. Now we have thrust. We have also the bull and the bear market definition. I will give the description of the bull and bear market definition in the description of this video below. So when you mix or you put together all these alternative buy and sell signals, you get a really powerful market timing indicator. At the same time, thanks to the built-in stop indicators, so the sell signals, our trailing stop losses, we have also a very powerful and effective way to get out of the market before real trouble sets in. And this is important because our time indicators are designed to not exit at a very light correction. So we need a really deep correction or the onset of a bear market to get out. Because I tell you one thing, don't try to time corrections. This is not our bread and butter, and I really don't recommend it. Most people will fail. We follow the trends, big trends. And this is why our trades last on average 1 year per trade. So what happens when you integrate all these time indicators, mean reversion, thrust into one single time indicator? I tell you something great. And this is my composite indicator, which is the real-time indicator I use with my real money portfolio. And this is what I'm going to explain in the next chapter. See you then.